Question 3 talks about Mrs. Anderson's budget and income and expenditure. We've got an income and expenditure report over here. And gives you her balance at the start to the end of the month, or not the balance, but how much her income was, and then how her expenses, and you can see her expenses kind of increased as the month went on. So the first one that we asked is define break-even point in the given context, and the break-even point in the context, you need to be specifying that it will be when her income will be equal to her expenses, and it needs to relate to the context. So in this case, to relate to the context, you would need to specify the fact that this is about Mrs. Anderson. So you could say it will be the point where Mrs. Anderson's income is equal to her expenses, or something along those lines. Then they want to write down Mrs. Anderson's budgeted total fixed expenses for the month. So the fixed expenses for the month are coming from here, where we can see where our expenses actually start from. And you can find it in the table over here to get the exact value, 16,624. 16,624, which just comes straight from the table. They tell you start of the month, that's how much her expenses are going to be. Now they want you to create a formula that she could have used to calculate the values if she determined her average variable expenses are 322 Rand and 31 cents per day, and you want to be using this format of total expenses equal to. So remember, when you're doing a formula, your formula is always your fixed costs plus your variable times by a quantity, but you cannot leave your formula to look like that. You need to say, well, how much was my fixed cost? My fixed cost was 16,624. The variable cost, they told us average 322,31. And when they say per day, well, that would be the quantity, because the quantity would be times the number of days. So she could say, okay, about 6 days into the month. Well, if that's my average cost per day, I'd say that times 6, plus the fixed cost that we know will happen as well. Okay. State on which date Mrs. Anderson will run out of money. So this question here, we know will relate to the break-even point. It should relate to this point where they will cross. And this question was poorly answered only by some because we missed out the fact that it is not actually directly over the 10. So if we draw a line all the way down here, let's see if I can straighten my line. Okay, and I see, okay, it crosses about here, so I'm going to draw my line kind of jotting all the way down here. You'll notice it doesn't go down directly to the 10. If I go from 10 all the way down, it's actually going to come up to around here, and that is not where the break-even point is. It's slightly below that. So if I wanted to estimate that, I would estimate it probably to be, I think I might have gone even a little bit too far over here. Maybe I must go a bit further to like there. It's probably going to be around 8, 9. And obviously you would have a ruler in front of you to check this when you're doing it. But it's going to be about 8 or 9 days. You cannot use 10 when we can very clearly see that if I move 10, it's actually separated out already. So we accepted with a bit of variation here. The actual correct answer was 9. If you calculate it, it gets you to 9. But we also accepted if you said 8 because you were estimating from a graph. 7 would have been too low though. So 8 or 9 was fine for this based upon the graph. Then we got to sort of the conclusion of this investigation, where we are now talking about how she's going to determine what salary she should propose to Huntington Limited. They say first suggest 2 practical considerations, not including her expenses. So this was important. We can't include her expenses that she should take into account when determining her salary. So you could have said things like inflation. You could have said things like market value for her job. You could have said she should compare what other people in a similar position are earning. You could also say things like she should consider company finances, because can the company afford to pay her more, Obviously, if they can't and they're struggling financially, they're not going to offer her a big increase. Those types of considerations. You can't be talking about things like the cost of medical aid or the cost of groceries going up or anything along those lines, because that is now talking about her expenses, which they say not including. Inflation is okay because it's a more generalized term, but it is bordering on talking about expenses as well. Then we've got 3.2.2, and it says, based on all the information provided in the previous answers, suggest a reasonable salary and explain how you came to propose that amount in full. So this was probably one of the slightly more challenging questions because there's quite a lot of free form in how you can answer this and where you can go with this. The important thing here is the word reasonable. Okay, what would be a reasonable salary? So you can't go and say she should be going from earning 22,000 to she should be earning 500,000. That's not a reasonable increase. Even doubling it is becoming an unreasonable amount. Most companies do not double salaries. It's an excessive increase to do that. So when we're talking about reasonable, we're going to say, and we chose to accept anywhere between 20,000 and 32,000. And I'll give you sort of a reason for where we were at. 20,000 is sort of in line with where she is previously. And we don't really know whether she's earning a good salary for herself or not at this new company. At her current company, I should say. Because remember, this is a proposal to another company. So there can be reasons to propose a salary that is slightly lower in order to make you more appealing for the job. So, and that is still enough to cover her expenses. If we look at her expenses from the last, from question 2, and we look at her expenses outlay, it is still sufficient to cover those. So that's why we kind of accepted that. With some lifestyle adjustments. It is pushing the border though of reasonable, because preferably we don't really want to accept a lower salary, but there are reasons people do sometimes. Then in terms of the upper bounds where we said 32,000, well really even this is being slightly on the generous end. It is higher than what she is currently earning, and so she could be making more money by moving to that job. Also, when you're proposing a salary, it allows room for the company to negotiate their way down as well. Because remember, this is a proposal she's going to make. So she could say to them, I want 32,000, but then if they negotiate it down, she will get actually to a salary that is still higher than what she's currently earning. Anywhere in between will depend on sort of what your value and your justification is. 26,000 will cover all her expenses and without impacting on her lifestyle. You could say about 27,000, which is sufficient for her to cover all her expenses and earn a bit extra, which will account for inflation and changes in prices over the next year. So anything along those lines will be a reasonable income. So the way that this was marked, because it was a 3-mark question, was 1 mark was for a reasonable value. So reasonable value would have to be in this range. Then the second 2 marks was for having an appropriate justification. Okay, you had to be able to reason why did you choose that figure. If you just said that she should stay with her current salary or she shouldn't change her salary, that was not accepted, because we're proposing to a new company. You don't generally want to earn what you're earning at the old company for that. Okay. And then the next question here linked to your previous one. So your calculation would have changed depending on what you answered. But they want your proposed increase amount as a percentage increase on her net salary. So for example, if I suggested in the previous question 25,000, I need to say, well, look, 25,000 is going to be her new salary. Her old salary was 19,200 Rand. We're looking at net, hey? We're not talking about gross here. We're talking about net. And then we're going to say that is the old salary. So we're going to put it over the old salary, 19,200 Rand. I hope you're seeing the formula here. New minus old over the old price. So we times it by 100. And if that was the value you chose, you would have gotten to 30,2. But we obviously would mark it based upon what your previous answers were, linking it to 1.5, where you got the 19,000, the net salary, and linking it to your previous answer in 3.2.1 as well. So that was the conclusion of this assignment and the investigation preparation. If you go and you mark it, the marking guidelines are also available on the Google Classroom, so you can see exactly where the marks need to go. You'll have a fair idea of how you would perform on a Term 1 assignment at this stage.